Good evening, traders. Hope you're all doing fantastic. I haven't done a trade breakdown in a very long time. Well, actually, I haven't been on YouTube in a very long time. And that's primarily because of being busy with the community and having other family responsibilities and just not having the time to sit down and create a lot of content for YouTube. But yesterday, Friday, well, 2 days ago, Friday, was a really great day. I think all of this week has been relatively good. We had a little semi sort of reversal towards the upside and we capitalized on it. I'm going to be breaking down just a few pairs, or not a few pairs, a few trades, a few price action things happening inside of this price action. So there was a nice continuation trade, there was a short trade, there was a long trade towards the upside. So, in my opinion, you could disagree with me, you can have different views, but in my opinion, in my personal view, I found three great setups in this trading day. So this was on the 30th of September 2022. So we're going to dive into that. And we're first going to look at primarily the main trade idea. I'm not going to use the bar replay. Well, not yet, but we're going to mostly primarily look at price action and what aspired. And I'm sure I'll be able to add a screenshot of the trade taken. So that way you can see it as well. And then, yeah, let's jump right into it. So first of all, first things first. This is where London Open was in my time, 9 a.m. GMT plus 2. And we could see that we have the buy side liquidity above this high. Why this high and not this high or this high? Well, primarily because that is the extreme. That's the highest point where price last traded to. And we had then this leg towards the downside. We broke this low. But this, in my opinion, was not a strong structure break towards the downside indicating sells. Yes, there was potential for this short trade. And I think a lot of people would have been tricked into going short. Raise your hand if you thought that this was a reversal trade. Probably a lot of people, because we had a semi-structure break towards the downside. Price correctively came back into this area, and then we saw the sell towards the downside. Definitely, there was a trade potentially in there, and depending on how you got in, you could have potentially grabbed 70 pips. Sorry, 67 pips, which is not bad for a day. Given that you might have had a stop loss of 17 pips, depending on how you got into the trade, it could have been a decent risk reward trade if you had taken profits over there. But this is not what I want to talk about. The one trade that I am going to talk about lastly is in here. Then I'm going to talk about the short in there. And then I'm going to talk about the long in here. So those are the three trade ideas I'm going to talk about. And before we get into that, let's just look at some more liquidity ideas. So in terms of liquidity, we have this high, the broke structure. We have this low that reacted off of this high, meaning this low was formed. We had a pullback and then we reacted off of this high. So now I'm going to use the bar replay, but it's not to show a trade. At this point, where was the liquidity? In this leg. So if price is trading from, let's just get the right tool here. If price is trading from this low to that high, where is the liquidity? Liquidity resting. Well, we have the liquidity below this low, and we have liquidity above that high. So those are the two areas where we have liquidity. And then we see price trading, taking out this liquidity. This high still, this low still remains. So we pull that out. In this leg towards the upside, we had liquidity above that high as well as this low. So where is the liquidity after we take out this high? Still resting below this low. So we have two possible lows where price could be returning to. So when once price reaches up here, we'll look at that trade in just a bit. We could potentially take a short, and these two lows are then our target. We also have some imbalance down here where price could potentially be reaching for. So That was then the framework to see price move towards downside. Price did not reach for this imbalance, but we did trade down into this area. Now we're going to quickly jump to the 1 minute and we're going to have a look at price action in this area and just dissect it a little bit. So we know the price has now entered a sensitive area of liquidity. It has reached an area where price is potentially able to reverse from. So we created this low, price trades towards the upside, reacts off of this block. And we see price trading lower, makes a pullback and trades even lower. After this move down, what do we see impulsively happen? We see an impulsive move towards the upside, which also then breaks the last structure point. So we have a break of structure towards the upside, and we had this area where price mitigated the liquidity resting below this low. And then we had this impulsive move going higher. So where did this impulsive move originate from? Well, it started in this little block right over there. So the idea is then the price will respect this area, not trade lower than it, and then trade towards the upside. Let's just wait for TradingView to catch up with us. So ultimately, we can see that we have a structure point forming at an area where we have liquidity. So we assume that we have liquidity below this low. We assume that there is orders resting, there's orders waiting to be liquidated below this low. Once price gives us this reaction, that is an indication, that's a sign that the stars are aligning and we could potentially find a trade idea and potentially take a trade towards the upside. Because of this heavy move towards the upside that breaks structure above this high, yes, it can react off of this area of supply and we could potentially see price just continue lower. But the key is that it reacts below an area of liquidity, higher time frame liquidity. Because there's this reaction in that area, that is why we see price. That is why then we would look for potential trade, because look at this as well. We had a push towards the upside, breaking multiple structures. We have a structure break, a structure break. So we could expect price to react off of this area and trade higher. That is the logical area to expect price to react off of. But we kept on going lower because we were at the extreme liquidity point. That's very important to notice as well. Because we're at this extreme liquidity point, once we see this break of structure towards the upside, we could potentially anticipate longs towards the upside. We can have our entry, we can have a decent stop loss a few pips below, just to make room for spread or a little bit of a fake out or another little sweep of this hello. But that is the general idea of the trade. And then you could take profits. My suggestion always is at the most recent buy side liquidity, which then was that high. Or if we go back towards the higher time frame, the main objective was the 15-minute imbalance, which was right over here. So there we have a pocket of imbalance that then was the trade to the upside. From a point of liquidity towards the internal range liquidity, towards what's happening inside that range created. So that was the long trade. Let's have a quick look at the short trade. Now, yes and no, there was an entry opportunity. Yes and no. I'm going to say yes because of your understanding of liquidity. Then you could have argued that yes, there was opportunity to take a short. No, if you're looking for higher time frame structure breaks. So if we go to the 5 minute, we have this leg towards the upside. There's the last 5 minute low. So if you expect a price to give a 5 minute entry, a break off this low, and then you would have expected price to at least return towards the upside. So that would have been the expectation, to take a short and then take the trade towards the downside. But in this case, we didn't get that. If you look at the 1 minute, we had price impulsively trade towards the upside. Now, even on the 1 minute, if you wanted to see a first area of break, it would have been this low. We break, but price doesn't go back up towards the upside. This imbalance is left untouched, left open. I think price has yet reached into it, but price didn't immediately return to this area. Possibly later on, price will return to it. But this was then where the initial entry took place. We had a break and a small return right over there. And then secondly, we had price come back into the imbalance. So if you take imbalance entries from a fair value gap or imbalance, then this would have been your entry, stop loss above it, or stop loss above the high, or this could have been your entry with your stop loss above. So it is aggressive either if you don't understand fully liquidity and where price could be reaching for next. Then it could be aggressive, yes. But if you base your trades on your understanding of liquidity and where you believe price would be trading to next, then it is a confirmation trade, in my opinion. And then on the 5 minute, for this short, this for me would have been the objective where we have this block over here. That would have been the objective. So there were a few nice trades on Friday. If you just understand the liquidity and where price is reaching for and coming from. I'm going to stop it at those two. I said there was another long, but I'm going to keep that on a surprise. And I'm going to stop it there. Guys, this was just a very quick, short breakdown on Friday's price action just to kind of get back into the YouTube game. Post a video for you guys to watch. Maybe you've learned something from it, and I hope you do. I hope you all have a wonderful day and a wonderful last quarter of the year, fourth quarter. So the year is coming to an end, and we might see some interesting stuff happening in the forex markets. So let's stay sharp, let's stay tuned, and I'll still see if I can come up with a schedule, posting more on YouTube. Let's see how it goes. Guys, that's it from me. Hope you all have a lovely week. See you in the next one. Bye.